Episode 40. Thank you for joining me. So I've got it figured out. I'm going to share this with you. But first, I'm Matt. I'm here to teach you guys. I'm here to share. I share through transparency. That's the only way I can share. I'm not a financial advisor, but I share with you my trades and then how I average down. I share my exit strategy. So what I'm doing here, I'm expanding my 349 family. I'm building a community, and I'm trying to create a culture of successful traders that know how to enter trades, secure profit, exit out, and repeat again. All right, there are 30 to 50 million new traders out there. So I'm sick of the institutions winning. So I don't care if you found me through AMC or GameStop or Webull, YouTube, Instagram. It doesn't matter. We're here to win. I'm here to show you the successful way to trade. All right, I don't care if you've been 2 months or 2 years or somebody I spoke to today that has 20 years experience. I see things differently. I'm here to share. So pre-market. All right, the 10-year spiked a little, which meant it could be a difficult day for tech. Yet the Dow was selling off. So what are we seeing? We're seeing hesitation in the market. And why? Because everybody's fearful of this Fed speaking tomorrow. Everybody's saying the CPI, the Consumer Price Index, went up. All right. So now the Fed is probably going to mention that they're going to raise interest rates. But I believe the Fed. All right. What am I going to do? Until they prove me wrong, they've been telling us for weeks straight they're not changing the rates. So they could go out and they could say something like, yes, maybe in like Q3, if we see continued growth and gains of jobs, then we might raise the interest rate and we're thinking about this percent. But right now, no, if they change the rates, then they're basically saying this to America yet again. And they're letting the institutions win. So I don't think that's going to happen. All right. So the market's hesitating. 2 reasons. We saw a spike at close yesterday. We saw a bit of a spike at open. Let me just explain this to you because I had the light bulb moment. If you guys don't see it, institutions, hedge funds, they trade first thing in the morning. Their orders are set. They have pre-orders. When the market opens, boom, 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 executed, done by 10:30. They're done. End of day. They're looking for the dips and the best value. So that's where their orders are. When you see that spike at end of day, yes, everything's on sale. So I'm going to talk about my positions. First, I mentioned, what was it? EH, right? At $25, it spiked all the way to 40. It went to 47 today. Of course, there's going to be consolidation and selling off. When the market's selling off, you better get the hell out of that position. EBON held on pretty strong. I mentioned we'd see 20% maybe 5 days ago. Yesterday, I think we saw what? 5, 10, 15. Today, we saw another couple of percent. Yeah, EBON's going to spike again soon. UVXY, we didn't crush it today, but I feel very good about my position for tomorrow. So I gave an alert on Monday. I gave an alert on Tuesday. These are my platform alerts. I gave another alert today. So 3 alerts in all. I gave tons of transparent trades, meaning I told you what I bought, what I sold. All right. But as far as my alerts, I'm going to share them right now because 2 of them are the same. UVXY. All right. $31 puts. So I want the UVXY to go down by Friday. I paid $1.50 on Monday. I paid $1.30 today. They closed at $1.30. So my second position is shit. My first position is down 12%. And these are my alerts. So if you're watching me now, it's a gift from me to you. The UVXY will go down by Friday. It will go sub 30. Okay. What else do we say? Okay. Other positions that I like that I know their strength. And again, today was a beaten up market. Everything was off. I mean, I think Workhorse was off like 8%. Tiger was off like 18% at one time. All right. Futu was off. There were so many stocks that were off. There was AMC Fun. They were having good, but there was a market sell-off in anticipation of Jay Powell speaking tomorrow. That's simple as that. But positions I like, I'm going to clarify real quickly because there are so many questions. XL, I was in and out yesterday, okay? I am back in. When I alerted to my platform that I saw XL spiking from $8.02 to $8.18, that somebody had an interest, that got me interested. I don't care that it finished at 810 or 806, and I know there's a short on the other side because I can see the walls up there. It doesn't matter. During the day of trading, that's where I'm looking for stuff to happen. So when the market rebounds tomorrow, when the Fed says they're not changing rates, okay, and the market rebounds and the Dow is strong and tech is strong, XL is going to bounce, and I believe it will bounce 10%. So snapshot this right here, 10% on XL. Romeo, okay? Romeo also dipped hard. RMO, okay? Dipped extremely hard. I think it was like under $8.40. I think it rebounded to like $8.70. I like Romeo. I think it's going to go to $10 very soon, okay? So now that's 2 stocks. Only one alert, but 2 stocks. I like Romeo. I like XL. Actually, that's 2 stocks, 0 alerts. You want to know the other alert I gave out today? Sorrentino Therapeutic, okay? SNRE, all right? I also think that's going to $9.90 soon. So it's a tough day. If you look at those 4 stocks, look at the 1 month, and you'll see 4 straight days of outflow, meaning red, meaning people don't want their shares. They're selling their shares for cheaper. The stock is going down. It makes sense. So again, I like Romeo, XL, Sorrentino Therapeutic, and I believe the UVXY is going down. Now, I had to decide which is best position today, so I made it diverse. I spread my shit all around. What am I going to do? So those are my stocks. That's me being transparent. There were 3 alerts. 2 of them were tied to the UVXY. So I guess which is my favorite? Probably the UVXY going down. I mean, that's what it knows how to do. Every time it spikes, it goes down. I understand the uncertainty in the market. It's there. I understand the hesitation. And when you see your stock going down, there's nothing to do. Oh, so anybody that needs instantaneous gratification, right? They average down. They're like, where's my pop? Where's my break even? And you're struggling today. The NASDAQ, the tech stocks, 4-letter stocks, okay? Ready? The worst day in today's market than we've seen in the past month. So if you're getting beat up and you're like, I thought I was doing it right, I'm blowing up my account today. If you're pretty sure you're blowing up your account, here's what I would do. And it might work for you, it might not. If you sell, you're going to sell scared and you're going to be off 40%, 50%, 60% if you're in the wrong options that expire this Friday, okay? If you have extra money, say you have stock, you sell some stock. Why? Because your options are more important. Your options are getting beat up. You're down 40 or 50%. You need the extra money to average down. So there are 2 ways to average down. First of all, you should probably watch my episode 37. I tell you how to average down in options the correct, safe way. If you're getting yourself in trouble, watch episode 37, Ask Matt. It's like I spent 30 minutes talking you through how to average down. But let's say you want to do it the safe way, and I'll make this real quick because anybody that watched episode 37 probably doesn't need to hear this again because you understand. And there's some of you that dipped your toe in water. So I teach a lesson, dip a toe in water. Instead of buying 20 contracts, you big spenders there, right? You buy 1 contract at first. You dip your toe in the water. That's all you're doing, all right? Next, if it goes down 20%, guess what? You just put yourself on sale. You just saved yourself 20%. All right. So now you need to average down. It's Tuesday. It's close of business. You're down 40 or 50%. Great, Matt. What the hell do I do now? I've got 24 contracts. I've got 46 contracts. First off, you decide if your stock can recover. So if your stock is one of my stocks, again, I'll repeat them, Romeo, XL, Sorrentino Therapeutic, and I think the UVXY is going down. Those are my current positions that I'm holding. I'm not in Fisker. I claimed profit. I was in and out 2 days ago, Monday. Was it Monday? Yeah, Monday. Today's Tuesday. All right. But what do you do to average down? So your average, you're expiring on Friday. Here's what you do. If you put $2,000 into the first trade, you can put $2,000 into the second trade and get the same options. Yes, it's extremely risky to do that. I'm not a financial advisor, and I'm not saying to absorb the risk. If you want to do it the safe way, and this is what I would tell my platform members. If you bought $2,000 worth of options, you're down 50%, okay? You're going to take $4,000, which is double the 2, okay? And you're going to buy July options. So let's use, for example, XL, all right? You have XL $7 calls. So that's what I have. That's what I'm using. Say I'm down 40%. I'm either going to buy more for XL calls that are $7, although I might have purchased them when the stock was higher. I didn't, but I'm using them for the example. So what's going to happen? I'm either going to average them. Now, say they're out of the money. Say I have $9 calls and XL's at $8. Although I think XL will be past $9 at some point this week, it would be risky to average down. So I would tell you, if you want to average down, you say to take the same $9 strike and you go out 4 weeks. You go to July 16th. You're buying yourself 4 extra weeks. So although I think I will be right the 3 remaining days of this week, if Matt is wrong, you go out 4 weeks, 5 weeks. That's easy. You spend an extra 50 cents per contract or whatever it is. It makes sense. So it makes days like today less stressful because what will commonly happen is your stock will go down 6% today. Now, if the Fed comes down and says no news tomorrow, your stock will likely go up 8 or 10% tomorrow. If you sold scared today and you're like, I'm blowing up my portfolio, I'm going to save what I can. I had 30,000. I have 4,000. Now I'm going to sell everything and just hold my 4,000. And when the market explodes tomorrow, I'll buy in my 4,000 then. Yeah, what's going to happen when the Fed comes out and says no change? Nothing. the market's going to take off. Okay, you're going to scare yourself today with level 4,000. If you hold strong and hold your position, the same way the apes do it with AMC. If you're holding options and you're down 60 or 70% and you can't average down, first off, you broke a rule. You need to be able to average down. So you have two options. You either average down to Fridays if you're in the money, or you go out to July if you're out of the money. Okay. I bought some. Oh, also, I bought I bought two contracts today. Tiger, TIGR. It was off like 18%. What was I going to do? It's over exaggerated. They said the offering closed already on June 11th. Sounds good to me. When Tiger goes down, it goes down an over amount. When it goes up over amount. So if the market is strong tomorrow, I expect Tiger to bounce 12% to the upside. All right? Snapshot it. All right. If the market is weak tomorrow, now it's going to be weak at some point tomorrow while they're waiting for the Fed to speak, especially going into 2:30 when the Fed speaks. The market will probably throw up on itself at like noon tomorrow. So whatever positions you're in, you got to understand that. Risk first reward, okay? The Fed speaking at 2:30, be careful. And I'm telling my platform members and I'm telling everybody on YouTube right now, okay? Be careful tomorrow. The reason the market was hesitating today was because they're nervous about tomorrow. Now, the reason it didn't sell off today is because they don't know about tomorrow, and they know if the Fed says nothing, the market will skyrocket, and they would have to pay, 5-8% more than they paid right now. So basically, the institutions that are buying at the end of the day and buying at the beginning of the day, they know where they want to be situated. So if your stock did well at the very end of the day, or your stock did well at the very beginning of the day, that's a good sign. If your stock did not do well at the very beginning of the day or the end of the day, that's a very bad sign. So please, we have a question segment. If your stock struggled at the beginning of the day or end of the day, ask me about it. I'd be happy to analyze the one day for you and tell you that you should run for the hill or plan ahead or whatever it is. Now, I do have some slides, all right, because not everything was a total loss. I told you guys where I am transparent. I'm going to answer some questions. I did some teaching. It's all encompassed. You got to do the triple threat here. And let's do a couple slides, okay? So what do we got here? Okay, so EBON, these slides, I guess I sent them yesterday after the session. So this is EBON. I got out at $1.18. I think they even went higher. They were $2.50 EBON calls. Again, took profit. Again, I know they spiked higher. I know they spiked higher by another 30%. All right, the stock spiked to $4 yesterday. It would have been $1.30. I got out at $1.18. Or it would have been $1.50. I could have got 32 more cents, right? The point is you take profit and you try again. Right now, they're actually probably $1.18. So the point is take profit. When it comes back down, you buy it. We repeat, step and repeat. All right, next slide, please. Yeah, I think this is better. Oh, I can't see this for anything. Can we use that other view, Carlos? Let's change it where the slide's bigger. Yeah, much better. Oh, okay, so this guy using strategy, same thing, was in Mara. Did not get greedy. I guess Mara was green today as well, but he didn't get greedy. He took his 91%. So everybody's in each your own stock, but we average down the correct way. And when it spikes, like Bitcoin stocks have been doing, all right? You take profit and you move on. And when it goes back down, you do the same thing again. Next slide, please. Oh, this was yesterday. I was talking to a lifetime member who was in trouble. He was in the SDOW. He was in puts. So as the Dow went down 180 points every freaking day for like 8 out of 10 days, it was like paper cuts. He was getting crushed. Yesterday, I tweeted out a video saying the Dow would recover yesterday. Now, remember, it was off like 250 and it finished at like minus 80 points yesterday. So it recovered 200 points yesterday. So this gentleman averaged down. Somebody else averaged down. I think guy under him, Kevin. Let's see the next slide. And basically, they got out with profit. Yes, Kevin, from being 40% or more down, you averaged down correctly, and they both claimed profit. One of them claimed a penny, and I think he claimed more like a couple percent. Anyway, next slide, please. The point is, you have to follow the rules. So when I talk about the rules, and I'm going to get to them real quick, if you follow the rules, there's no instantaneous gratification, meaning you don't execute the rules, and then all of a sudden you're rewarded and there's a birthday cake in front of you and it's like filled with money. You follow the rules. When the market reacts the right way and your stocks react, if you're seeing demand, you get rewarded. That's what this is. It's investing in the stock market. Anybody that's infused, maybe you should follow my platform. It's 349 Trading. I charge $3.49 a week. I haven't spoken about that and I won't start yet. SRNE. I think there's demand. So I showed you the stock was $9.04. Now, what can you see in the chart? Now, if you see the bottom chart, it's a 1-month chart. So green is inflow, yellow is outflow. So I'm showing you today's an outflow day, but volume is light. So what's going to happen the next inflow day where there's demand and there's stronger volume? This stock is going to spike and it's going to be back close to 10. So it's risk versus reward. If the market sells off tomorrow, the stock will lose probably 3%. All right, $8.70. Okay? If the market is green tomorrow and the Fed does not change anything, I'm saying this stock will be closer to $9.70. Yeah, a whole 8% gain. All right, next slide, please. What else we got? Oh, UVXY puts. So I was talking about my alert yesterday. This is my alert. I bought 14 contracts. I paid $1.50. Today, I bought 30 contracts. I doubled it. Yes, the UVXY was not down 40% for me, but I think I'm going to be right on the UVXY. I'm always been right. It's an exchange or a trade that I seem to own, just like Tesla. So I think the UVX going down. So I bought 30 contracts today at $1.30. I had 14 at $1.50. These are on the spreadsheet for platform members, and so is SRNE, which we bought the $8 calls, and I paid $1.01. So I need SRN or SNRE to be above $9.01. Well, shit, I just told you that if it's a decent day tomorrow, I'm expecting it to go to $9.80. Talk about reward. Risk to the downside, reward. 30%, 80%. That makes sense to me, especially if I think I'm going to be right. Next slide, please. So, yeah, I have a lot of puts in the UVXY. Here we go. I mentioned it. I alerted it. I bought some at $1.30. That's where it closed at. So I'm not killing it, but I'm not losing. I bought 66 contracts. I then bought 24 more contracts when I was sure that I was going to be correct. And yes, I paid $4 more per. So I spent an extra $100 making sure that I thought I was going to be correct rather than just jumping in with 2 feet. Now, this is me. So anybody that follows me or gets ahead of themselves, especially if you're working on a smaller account, 2,000, 7,000, 10,000, you could blow up your account. I'll talk about that right after. I'm going to tell you how to blow up your account. You don't want to, but there are ways. Next slide, please. Oh, no more slides. Okay, so let me get right into it, okay? You can be a perfect trader. You could be crushing it for 6 weeks. You could be crushing it for 2 months, for half a year. There could be one trade where you start with you're too smart for yourself. The market looks green and you buy 12 contracts, all right? You paid like $3, so you spent like $3,600. That doesn't matter. You have like 50 grand. You only spent $3,600. You're not worried about it. It's a good percentage. It's not like you're overextending yourself. Then it goes down that morning right after you purchased. You're down 17%, and you're too smart for your own good. Meaning, you're like, I knew I called the bottom. I know this is the worst that I'm going to see. And instead of you had like 12, I said, now you purchase like 22 more because you know you're going to be right. You're so overly confident that you're correct. Now you have 34 contracts. Then what happens? The market takes a shit on itself. You have 34 contracts. The market just took a crap on itself. You're down 42%. My rules say when you're down 40 to 50%, you average down. So you follow the rules. At least you think you do, because my rules also say if you think that it's not done and the market could go down lower, meaning your stock's down, it's only one dip, and you're like, yo, the market could definitely take a shit on itself and fall off again. If you at all think that, even if you're down 40 or 50%, you wait. You wait until you're sure that's the bottom. You don't get paid extra amount of money to be extra smart. If you're off by 2 cents, it's okay. You're saving yourself the downside. I'm telling you how you can blow up your account. So you don't wait. You say 40% is the rule. I'm putting in 40%. I had you had like 36 contracts. So now you're going to buy 72 contracts more. So now you have 108 contracts. Now, why do I know you have 108 contracts so quickly? Because as soon as you put in the order, it executed. Worst sign in the world. If you put in an order and it tells you it executed like that, literally, snap your finger, just like that, you know you put in a bad bid. You want to put in a bid, meaning if the current bid is $1.60 and the ask is $1.70, you want to come under $1.50, $1.48. There's somebody on my platform said they paid 20% more for an option than I did like a minute later, and it didn't go up that much because Robinhood tells you, here's the price. Would you like to buy? And you say yes. That's not how we do it. We put in a limit price. You always put in your own price. When I talk about planning ahead, you plan on the entry. If you always overpay, the next time you're going to buy an option, here you go. Instead of paying $5, because you always know that you overpay, you buy and it goes down 20%. Here's a secret, okay? Instead of paying $5, if you were going to pay $5, what's 20% off? $4. Okay? So the next time you're going to pay $5, instead of putting your bid in for $5, pay $4. See if it happens. Now, two things will happen. Number one, you'll see that it gets executed. You're like, yo, that totally makes sense. Every time I put in a bid, I'm bidding 20% too much, right? You just see it. You're like, oh, I'm down 22%. I'm down 18%. You know you're bidding too much. It doesn't matter if you think you're going to be right. The point is, every time, if you're down 10 to 20%, a couple of minutes after you make a purchase, you're bidding too much. So if you bid $2 and you're like, I want to pay $2.20 or something like that, don't put in $1.90. I know for me, okay, here's the best analogy for me, okay? It's like a game of pool, okay? It makes sense. I hit the cue ball this way and it should knock the other ball right into the pocket. But when I see it from far across the table, I'm looking at it, I'm like, there's no freaking way that I'm going to hit the white ball right in the middle. It's going to hit that. It's going to hit the other ball on that direct angle and put it in the pocket. It just doesn't make sense. And I like numbers. I like angles. I like soccer. They all line up at angles. But when I play pool, I don't get it. So the same thing when you're putting in a bid or an ask for your order to either buy or sell, whatever you're doing, okay? Puts or calls, I don't care. But you're putting a bid because you're opening a position. You put an ask in to close a position, all right? So you put in a bid, whatever the current bid is. Robinhood's like, you want to pay $1.80? You're like, no, I don't want to pay $1.80. I'll pay $1.55. So what happens? Number one, the stock goes down, you get $1.55. You were going to pay $1.80, you pay $1.55, you save $25 or 25. What would the percent be? The percent would be like 14%. So basically, instead of starting your trade out down 14%, you're like even. And when it goes up eventually, instead of being up 28%, you're now 42%. So here's some exit strategies. People always say, Matt, how do you know when to exit out of an option? All right, so is everybody listening? Get your ears ready, okay? These are secrets. All right, everybody has their own secrets or trade secrets. Here it is. I make a spreadsheet. Now, when I exit out of a trade, if I don't have to average down, okay? And I'll explain averaging down. If I do not have to average down, I'm looking for at least 100% return on my options because that on average is what I get. I get between 100 and 200%. So if I'm right about the bottom and I call something and I enter into it and I don't have to average down, I'm looking for at least 100% return. Now, when I have to average down, okay, this is completely different. It's like you're in a boxing match. That's how I say. So it's a boxing match. Nothing's easy. You didn't get awarded the trophy. There's no belt at the end of it. You're in a fight right now. So when you have to average down, you're like, yo, I'm down 60%. I've got 4 contracts. I need to buy 8. All right. I have 24 contracts. I need to buy 48 contracts. When you're in a fight, all right, and you're getting beat up and whatever the stock is going down. And keep in mind, tech had its worst day today in a month. So if you feel like you're that fighter, you're like all bruised up, you have these options, you're like, they're worth shit. All right. First off, watch episode 37. Your options aren't worth shit. All right. If tech gets destroyed tomorrow, then yes, you are correct. Your options are worth shit. But this is what the hedgies do to you. The hedge funds, the banks, the institutions. Here's what they do to you. They make you feel so inadequate about trading. They make you feel like every single thing you do is incorrect. If you average down, you did it wrong. You look, you're down more. Okay. If you didn't average down, you see the spike and you're like, I'm such an idiot. I didn't average down. This is what they do. They get in your mind. Now, it's not them teaming up on you, but I'm letting you know the impact. They get within your mind. Their objection, the object of these institutions, right, is to take money from you. There are 30 million traders out there that really don't know all that much what they're doing, but you guys have money. You're playing with 10,000, 100,000, 500,000 or more. It doesn't matter. But when you scare sell or don't have strategy, when you enter into a position and you don't plan your exit, they're taking advantage of you. The stocks go down, they sell harder. They spike the UVXY, you guys sell out. You're down. Instead of making 30%, you just secured 30% loss. That's what it means to scare sell. If you scare sell, okay, I'm going to ask you right now, pay this forward because it's important you share this video with others that scare sell. Meaning, if you sold and you were up 30 or 40% in a position, and instead of claiming profit, you sold for anything negative, minus 20%, minus 30%, you were up 40%, please pay it forward. Share this with someone. If you're part of my platform, if you're not part of my platform, please, I will share with you that we don't do this. We understand that the market just took a shit. Now the market has two options from there. When it shits on itself, it can fall even harder, or it's going to rebound. It's not going to just hang out forever. The point is, when the markets were off 120 today, tech, and the Dow was off even more, they had two options. The Dow could have fell 400 points. Did it? No. Tech was beat up like minus 128 for most of the day. Did it fall worse? No, it didn't. So that's your light at the end of the tunnel. It didn't completely sell off. Now, if the Fed comes off tomorrow and they say inflation's rates are going up, and here's proof, and we're going to raise interest rates, then yes, the market will sell off. The Feds needs to go on tomorrow, and Jay Powell needs to say, consumer price index went up. We understand inflations are trickling up, but we believe they're going to peak out here and then trickle back down, that we're going to return to normality, return to society. If he shows that he understands the curve, which I believe they will, actually. It's crazy. I actually believe they're going to do that and say we're not going to look at them till like quarter 3 or quarter 4, right? We're in the second quarter, probably quarter 4 or the first quarter next year. I hope the first quarter next year. It would get people and say you're solid for the rest of the year. If they say we're not going to change rates till maybe Q1 of next year, you're like, okay, I know exactly what I'm doing. You fill in the missing data, okay? So it's not for me and you. It's for institutions and for big money players. That's who moves the market. That's who cares where the 10-year is. I know you don't care, Eric, and Kevin, you don't give a shit. I don't care where the 10-year is. You think 1 basis points or 5 basis points changes the way I trade? If I have 60,000 or 100,000 or $250,000 in options, I'm not borrowing this money. All right, I am risking the money, but I'm not borrowing the money. So whether they're paying 1.50 or 1.54 or 2.0, I don't care. Bring it up to 2%. It really doesn't impact the way I trade. So it's all about the institutions. It's all about big money clients of the institutions, that they're borrowing money from the institutions, and the institutions have risk versus their clients. And their clients want a lot of money because their clients want to invest. So if you're getting this, please, averaging down with options. Let's go back to it. Episode 37, I killed it. I went 30 minutes strong on telling you how not to blow up your account. How else to blow up your account? Just one trade, okay? Meaning you're good 90% of the time. One trade, you blow up your account. You choose an option strategy that's too close. You average down the wrong way, and you put too much of your portfolio into one position. If you have over 50% in one position, you're too strong. It could totally work out. Don't get me wrong. All right, I've taken chances before. I've taken some big chances before, all right? But again, I went into UVXY going down because I know that's what it does. Stocks confuse me. One day there's demand, one day there's no demand, one day there's demand. Again, I track demand, so they don't confuse me all that much. I anticipate the spikes. So yeah, the stocks I spoke about, in case you missed it earlier, you can go back and watch it. SNRE, right? I expect Sorrentino Therapeutic to spike. I expect XL, and I expect Romeo Power to spike. Those are 3 stocks. I see demand. Now, it's been 4 straight outflow days, but volume's been so small. So that's what I see. So I say once there's a green day. Now, I don't care if it's like Biden coming out tomorrow talking about green energy or something like that. I don't care if it's the Fed not raising rates. If it's something like that, I will take whatever catalyst, whatever spark that's going to light the fire to send my energy stocks back up. Yeah, I think I positioned myself well. So I tell you guys, lesson, risk versus reward. My downside's 40%. My upside is over 100%. My trades are at least 80% profitable. Go on the spreadsheet, okay? That's it. I have 3 new trades, 2 of them in UVXY puts. I think UVXY is going down. It closed at 33.40 or 33.50. 31.40, 31.50. 31.50. I think it's 31. I think it's going sub 30, sub $30. That's my prediction. Always make predictions. I teach you. And the other one, SRNE, Romeo, I don't know what I was talking about. All right, let's get to questions. I'm too lost, man. Please pay it forward. All right, I don't know some of these stocks. Sometimes I know stocks, sometimes I don't. If you have questions about stocks I don't know, tell me exactly what you're looking for. Tell me when they expire. Tell me what your average is and how many contracts you have. I will tell you what I would do. If you just want me to analyze a stock, I look at the 1 day, the 5 day, and the 1 month. Now, keep in mind, tech had its worst day in a month today. What do you think is going to happen? Remember, we're at frothy levels. Tech and the Dow was at an all-time high. So the market had two options today: go even higher or pull back. It's called consolidating, finding a new level. So consolidation could be another day. It could happen. But once it finds a new base, I think the end of the week it's going to explode. So hopefully I'm good. All right, let me look up some of these stocks, please. ATVI. All right, ATVI. It obviously struggled. Activision, because it's a 4-letter stock, and tech had its worst day. So anything tech related, 4 letters, you're going to tell me it's going to be off like 1 to 9% today? Yeah, I mean, it's a wide range. All right, so Activision. So I'm going to look at the 5-day chart, and it's basically even from where it was 5 days ago. I know it looks terrible because it went up that mountain and fell off that cliff. But Activision is literally less than 1% from where it was 5 days ago. So I think Activision looks great. I'm going to look at the 1 month right now. I'm assuming there was demand because it went up for 3 days. Yes, there was heavy demand, and then there was heavy selling today. I actually really like Activision. Why? Because it'll probably go up. Now, if the market moves tomorrow and tech moves positively tomorrow, I won't be entering into Activision. If the market tanks tomorrow and sells off, then yes, I will be looking for the cheapest Activision options I could buy, because I think Activision will go up past $100. I think it's at what now? $96. Okay, it's 95, 97. I think it'll go past 100. I would say 102, and I would say sometime soon. Okay, so Activision in the last month, it's only up 3%. And again, there was a huge sell-off today of 3%. So it was actually up 6%, and tech was at an all-time high. So if tech rebounds tomorrow, okay, Activision will break 100. Next stock, Beyond Meat. I think I have that someplace, but I'm actually going to look it up because I have too many stocks on my watch list. I have stocks on my watch list so I know when they spike, so I can analyze their volume, so I can analyze the demand, and I can share it. I have 65 stocks, and I know within the next few months, all of them are going to spike at some point. But I know on different days, EMAN. All right, that's the slide I was going to share with you guys tomorrow. EMAN, EMAN. It went up today. I think it was up like 50 cents, which is maybe like 14 or 15%. I don't know where it finished, but my stock, my price target, okay, because we always have an exit strategy, is I believe $5 and either 88 cents or 5.66. It was at 4.23. So that's a whole, what, $1.50? That's another 20% to go. All right, Beyond Meat. Light volume. There's been light volume there since June 8th. When there was heavy volume, it went to 138.70. So, I mean, that's where the support is. It was down 6%. This is a meme stock, and I don't like this stock ever since Jim Cramer got into it, right? The stock was 106. He's like, my charitable trust owns it. If you Reddit boys want to play with it, and it went from 106 to 116, he was like, oh, yeah. He's an asshole. Share this. Jim Cramer's an asshole. Pay it forward. Share this. Please, thank you. I wouldn't be in Beyond Meat. I hate Beyond Meat. I think it's overvalued. I like your first Activision play, though. That's a good one. Next question, please. All right, what do I think of QS? All right, QS has got to be a green energy play, right? So we're going to look it up, and we know that all energy has been beat up. And how do we know that? Because NIO, which has been on a run, NIO, which has been on a run lately, it was beat up. So actually, QS actually had info today. Oh, wow, this is a good one. I'm going to add this to my chart. This looks really nice, actually. I would look for a discount on this. Okay, yeah, so it had negative outflow for 5 straight days, 5 days of outflow. The same identifiers that I'm seeing in XL, Romeo, and Sorrentino Therapeutic, right? The same identifiers. I'm waiting for a green day, and on a green day, I think it'll spike. Now, today, I think it was a beat-up day for the market, right? But QS went from outflow to inflow and 0.161% to point. Hey, what do I think of QS? It went from down 3.5 to point. Yeah, there it is, right there. Positive day. Good question, Jonathan. Good noting it. So, yes, that's like a 5% change in the stock, okay? There was 11 million. So we're going to look at the average. If the average is 15 million or under, the average is 13.5 million or 13.3. It's at 11 million today. So almost 12 million. So that's pretty darn strong. All right. That's a positive sign for QS. So, yeah, it's on the top of my watch list now, QS, because if it moves 3% on a good market, we might get 12 or 15%. And options right there, we're making over 110, 120%. So 120%, $10,000, that's $12,000 extra dollars maybe tomorrow. So I will be looking at QS for the remainder of the week. Thank you, Jonathan. Next question. All right, you're still holding UVXY puts. Do I think it'll be profitable by Friday? All right, so here's the thing, and here's the thing that gets me sometimes. And please read into this as you will, okay? If I make an announcement and you're part of my platform, which I believe you are, and I say I'm holding mine to at least tomorrow, I'm sure it's going down at least by tomorrow, or I'm sure, or I tweet, I think it's going under 31 today and 30 by Friday. Yes, you have to do the math. It's like if Johnny's bigger than Susie, Johnny's always going to be bigger than Susie. That's just how it is. So yes, if I'm holding on my position, I swear I will tweet it out. I guess I wasn't clear enough when I tweet out stuff. I will retweet it and be like, I got rid of it. Right now, I've already told people so many times what I'm in, and I don't want to make this commercial. But yes, I like that position. I like puts in the UVXY. By Friday is perfect. I like the extra week also. It doesn't matter. Next question, please. All right, how do you average down or just cut stock when it's going down? Do you use percentage rules? So real quick, I'll simplify my rules. For stock only, you enter using the 25% rule. So whatever money you were going to put in the stock, let's say it's $5,000, okay? You don't invest $5,000 right away. You invest $1,250, which is 25% of what you were going to invest in that stock. So let's say it's DraftKings. They got beaten up today. You like the stock. Instead of buying 400 shares, you buy 100 shares today. If DraftKings goes down 10%, yes, 10% from where you bought it, that's when you buy your second 25% or 100 shares. It's the proper way to average down. You always have money on the side. Now, why is that a good thing? Because sometimes you have this money on the side. You have two positions in DraftKings. Let's say you bought it, went down 10%. You're waiting to see if it goes down more before you buy your third position. It doesn't go down more. Instead, you have an option position that is struggling. Guess what? You've got this money on the side. Instead of buying those 400 shares of DraftKings, you only bought 200 shares. You average down the correct way, and now you have $8,000 on the side to help and support your other position that is having trouble. All right, next question. That's how you use the rules. If you need, you buy a third position and a fourth position. I've averaged down with 8 positions before. Ride, $11 calls, expiring Friday, James. Okay, let's look at it. Ride, R-I-D-E. All right, today was an inflow day. Oh, good for that. It went up $1. It's a tough stock, okay? It seems to mimic. So if you go back to June 8th, it had a strong outflow day followed by an inflow day, okay? Then it was quiet. Then it had a strong outflow day yesterday with bad news, followed by an inflow day today. It went up 11% today. Let's look at the one-day chart and see if we actually missed out. Because if it started out slow in the morning, there was probably an opportunity to make money in Ride today. No, it spiked pretty hard at open. So Ride is what it is. It seems that Ride's a stock where it spikes the open and kind of consolidates toward the end of the day. So I'd be careful with those. Plan ahead. If the stock is $10 right now after hours, plan for it to spike to 11. Figure out what your price would be and put in a pre-market sell. So if you paid $1 and you think you can get $1.40, great. You just made 40%. Plan ahead. Next question, please. Please. All right, Joe John. All right, so Joe John paid a little to get his question heard. If you're late and you want your question heard, please, there's like a little button on the side. I'm not a technology person. Carlos and I use this for pizza. We're saving up for sushi. So thank you, Joe John. All right, plug. $31.50 expiration June 18th. Okay, June 18th is coming up. You have 96 contracts. Okay, so you went hard. You probably averaged down. But there was a way to average down. If you watch episode 37, I'm not on you about this. I'm going to answer your question. But if you watch episode 37 and you average down today or yesterday, you shouldn't have. You have less than 4 days till the expiration. So if anything, if there's a contract that expires June 25th, that's where I would have averaged down. If you threw 10,000 at the first position, I would throw 20 at the second. And these are the type of numbers. You have 96 contracts. I'm going to look at it. Plug almost made a run today. When the market opened, Plug was fighting. Inflow was positive for the first hour and 15 minutes until the market turned shitty. Okay? So Plug looked like it was going to make a run. You can't help it that the market went down. I don't control the market. You don't control the market. So let me look up Plug real quick. I'm sorry for the delay, and I'm not giving you a lesson. Here we go. Plug, 5-day chart. Boom. Yes, of course it got crushed today. So it opened up pretty strong, and then it looks like it just got crushed. Yeah, I mean, that's exactly what I saw. It looked like it was going to move up. There was buying literally for the first 30 minutes of the market. It was closing in on $31, I think, right? 30.71. Okay, which would have made your puts look very attractive this morning. So here's what happened. I'm assuming maybe you didn't average down today. Maybe you did. All right, maybe you didn't average down out of this morning. Maybe you only had 24 puts this morning. I'm thinking you probably only had 24, and then you bought 48 towards the end of the day. This is good money after bad. If you bought more contracts today and your contract expiring in 3 days, you're throwing good money after bad because plug is under, it's $29.20. So you're at least $2.30 out of the money. So you basically need plug to move 10%, all right, 10% as a stock so you could be somewhat profitable again. That's not going to happen. So what is going to happen is we look at the 5-day chart here, and we look at maybe it could bounce up to 32.5. I mean, you're looking for a strong tech day. All your money is bet on the Fed not raising rates tomorrow and saying some good shit. That's the truth with that. I'm assuming you're in the same position. NNOX, same thing. When stocks like that, NNOX, EH, AAPS apps, eBay even had a good run. I was touting eBay. I finally sold my eBay options today. Instead of getting 290%, I think I got 220%. I was greedy. I said I was going to get over 300%. The point is, when you see the market turning on your 4-letter stock, which probably started yesterday, there's time to exit. There's time to average down and time to exit. And the people that didn't felt it today because every 4-letter tech stock got beat up. Tech had its worst day in the market. So everybody that's feeling that it's them and that it's them that blew up the account and it's your fault and you're just having a terrible night, all right? Please understand you're at the bottom of the bottom right now. There are 2 options for the market. It goes down, and if you accept that you're probably already crushed and you blew up your account, then you're not going to scare sell. And if it pumps back up, like I think it will, then your account will be fine. You'll be like, oh, my God, I can't believe I almost blew up my account. I hear so many stories like that, and then I hear about people that blow up their account. Because what do? They scare sell, and they had 24,000, and they sold it 4,000 because they didn't want to end at 0. And when whatever it was rebounded, I can tell you a specific example, but I don't want to get the guy in trouble. So here we go. NNOX. Here's what it goes like. It looks up, spikes down. The spikes look. I mean, today was a tough market. So here's the thing. When horses race, or baseball teams race, or runners race, some people say, I'm going to throw this out. It was a bad race, all right? They're handicapping. They're throwing it out because it's a bad race. So I'm looking at today of NNOX going down 3.25%, and I'm saying if I throw that out, the chart doesn't look half bad. So I think you have a chance there. I wish you had 96 contracts of NNOX and less contracts of plug. NNOX had it consolidated for 2 straight days. Volume was small the previous day, so I think NNOX is actually going to go higher. Both close to down 70 cents. Should I average down or hold till Friday? So again, plug, I would probably unload on the spike, okay? That's what I would do. Whatever it is, I would look for a 50% spike. So if it's 20 cents only, I would try and get 30 cents tomorrow. I know it sucks. And if it ever spikes really hard, you'll be like, I'm such an idiot. I sold for 30 cents. That's what I would do. I would try and get max value. If it's 20 cents, I would get 50% more. If it's 32 cents, I would ask for 48 cents. NNOX, I would actually average down hard. If I had 40 contracts, I'd probably go 2.5 times. I'd probably buy 100 contracts. The November, the expiration is 2029. So it's not far from that. Let's see where it closed. The puts, no, we're looking at calls. I mean, this is an example for everybody. If you're here, this is what to do or what not to do. Okay, so we're looking at the $29 calls. Is that right? Yes. So right now they're 60 cents. So yes, if you bought 100 more contracts, you'd be sending $6,000. Okay. However, your average price would be closer to the 60 cents that you're paying for them. So when it spikes to $1, okay, and you're at 40 cents or something like 83%, when you average in the other stuff, you're still going to be north of 50%. It is extremely risky, okay? I'm not a financial advisor. This is risk that you either accept or you don't. Now, NNOX, if you don't want to average down with the June 18th calls, I would find the next expiration, whether it's June 25th or July, and whatever amount of money you spend, say it's $3,000, I would spend $6,000. If you spent $4,000, I would spend $8,000, okay? NNOX chart looks good. Plug does not look that great. All right, and especially doesn't look so great if you're 31.5. Today was the day for plug to run. It started to run when the market opened for the first 30 minutes. And if the market had a better sentiment today and you just got screwed, it was a bad market sentiment when your stock was finally ready to run. Who knows? It could have run north of $32. And you could accept the risk and say, the Fed's talking tomorrow. What's going to happen? How's it going to play out? If the markets turn bullish, you'll see a superior spike. All right, next question, please. So again, everything's risky. AHT. Okay, I mentioned this over the weekend. I was looking at it that I thought it could spike to $7. And I still think it's going to spike to $7, but I haven't bought a position. It went to $6.20. I think it went to $6. I think it was off 5% today. So let's look at that. I know it was off at least at some point. It was off at AHT. Yes, it's not on my watch list anymore. Oh, 550. Okay. So it went off 10% today. Yeah. So, I mean, there's a reason I don't buy certain stocks. When I didn't like it yesterday and it settled at $6. Again, the people that follow me said, hey, you mentioned this. Is it still good? And I said, no, we didn't get in. We didn't get in. Because you have to be very, very, what's the word I'm looking for? I don't know. But I did not get into AHT. I don't want to get into AHT. Now, anybody that follows me on my platform, here's the thing. I share every single trade I make. It's transparency. So if I show Fisker and then I say I sold Fisker and you don't catch it, you think I'm in Fisker or I learned about Fisker. I didn't. Same is true for a couple other ones. The ones that go on the spreadsheet, I want those to be as close as perfect as possible. I'm trading at 80%, meaning every stock or option I give on the spreadsheet, I want it to be a winner. Stocks, I'm trading 19 wins, 3 losses. And the options, I'm trading 56 wins and 14 losses. I'm trading 80%. Okay, so the point is I talk about a lot of stocks, a lot of positions. I see a spike. This could happen. That could happen. I don't enter in every single thing. When I enter in, I say, boom, alert, asterisk, boom, boom, alert, alert, alert. Did you catch this? So this week, we've had 2 UVXY put positions, all right? And we still have 3 more days for those. And the other alert was today, SNRE, Sorrentino Therapeutic. It was the $8 calls that expired this Friday. I paid $1.01, okay? I think some of you got in cheaper. Actually, it's probably cheaper than that now, right? $1.01 would mean it applied a $9 price. And I think the stock's like under $9. So, yeah, you could probably get in cheaper. That's what I like. It expires Friday. My trades are profitable. So, AHT, it's down to 550. It's probably oversold. It's probably oversold for 3 straight days. It was around, I'll tell you where it properly should be. Oh, no, it's not oversold. It could be anywhere between 522 and 570. It makes sense. So 550 makes perfect sense, which I guess was another reason we didn't enter in. It didn't look that tasty. Remember, we want sales, like something's on sale. It's like having a fire sale, like Tiger, TIGR. I only have 2 contracts. I didn't put $20,000 in. I think I put like $400 or $500 in. The point is, Tiger was on sale. It was down 18%. I actually think I put $540 in, $540. Okay, I wouldn't be into AHT right now. Next question, please. I do like Tiger. It was on sale. I can answer this without looking. Yeah, here you go. Did Delta bottom? So again, we saw the Dow sell off again. So we're 11 out of 13 days of outflow. Now, here's the great thing about Delta. And you're saying there's no great thing about Delta. Ever since I entered in the past 11 days, one of those days you entered in within the past 2 weeks. When you entered in, Delta was a sitting duck. It was like, they shot Delta. The point was the Dow has been selling out. All right, while the Dow sells off and outflow is greater, which it was again today, okay? Delta is not going to go up. So did it bottom? That's a great question. I like Delta. No, it bottomed at $43 when I bought my options. It was 42 and change. I shot my options video, and I said, this is the best stock to pick right now. It was between Delta and NEO. And you know what? NEO went to 30 after I picked it. I shot 2 endings. I wasn't sure which to use. NEO was $34. It went to 30, and I was like, God, I look like such an idiot. It's $30 like the next day. Definitely use the Delta one. Then NEO shot up. I would look like a genius. I think I'll be a genius either way. But let's look at Delta. I'll let you know if it bottomed. That's funny, though, right? All right. Oh, I mean, the chart looks like shit. But, yeah, if you go back, the chart is matching up with maybe 520. So I look at the 1-month chart, and you see where the actual bottom was. No, so the bottom was 521, 520, something like that. It's getting pretty damn close. And that was probably when I shot my options video. I'm assuming that was like a Thursday or Friday before the weekend. With that said, yeah, I mean, I like Delta. I like airline stocks. Keep in mind, it was off less than 1% today. So I get it. It was like paper cuts. You lost 10 cents one day, 20 cents another day, 17 here, 31 here, 14 there. It adds up. But there are stocks, tech stocks, that would drop 10%. Or heavily shorted stocks like Root, which is off 10% or 11% today. right? So when Delta's off 1% and it's a tough day in the market, you're assuming it's a reopening play. Now, another thing that's tough for Delta right now is I think the UK just put themselves on lockdown again. They're having this strain, this D Delta strain. How appropriate it was D. So I like Delta too. I think it hit rock bottom. I'm looking at the 3-month chart. It looks pretty bad right now. Again, if I'm averaging out with Delta, here's what I keep saying. Same thing with Carnival. People say, how do you average out? Every time it dips hard. Now, I didn't buy today, but I will be buying tomorrow morning. I will buy the September calls. So my thought process for Delta it'll be $64 by September. $64, which is $20 higher than it is now, about 40%. Carnival, I think, will be $55, which is about 43% higher than it is now. Okay, so my options, I'm going out till September. I don't look at those options every day. Carnival and Delta, they're like put away in my piggy bank. I don't even check the positions. If Carnival goes down 3% today, I didn't know it. If it goes up 3%, I probably didn't know it. Now, I do care about Delta and Carnival if I had options expiring this Friday. Then you need that instantaneous move. So when I tell you to buy options that are longer out, that's what I do. Okay, I go out further. That way you don't have to worry. I have plug options that are out till September that I'm still profitable, but I'm not happy with the direction of plug 29.20. But I bought the options when plug was south of $25. I think it was 24 and change, and I bought the $25 calls. I think I paid $4.5, which would bring the stock up to like $28, $29. So I basically have all the time now. So I think I'm going to have returns of 300, 400%. It's not instantaneous. I don't have plug options that expire Friday. If I did, I would be shitting myself. I'm not lying to you. I don't try and sugarcoat anything. I am transparent. If I see you stepping in shit, I will tell you you're in shit. Now, I mentioned Jumia the other day, JMIA. I mentioned the demand was gone and that I sold my options. It was probably like 5 days ago now. I know some of you keep thinking that it's going to rebound. It hasn't yet. And I know some of you are stepped in shit. And I tell you how to average down. I don't say buy the ones that expire Friday because I would be so nervous. Now, they can change. The market can change tomorrow. Again, you're looking for tech to rebound tomorrow. You're looking for a no Fed rate. All right. But if that happens and you bought out till September, you have all this extra time. Say, okay, whatever, fuck around with Jumia, blah, blah, blah. Went up to $48 when I knew it would by September. Yeah, $48. It's sub 30 now, right? It's like $29. I say 48. That's $19. $19 is what? 40, 45%, 46%. All right, next question, please. The point is goals. You have to have long-term goals. Okay, XL. Yes, I see XL bouncing back. I shot a tweet out today. And anybody that doesn't believe me or doesn't know who I am, this is what I do. Okay, so I'm going to look at XL right now. And I will tell you the different times today that I saw some mega buying in XL. Again, it was a tough market. But I do know there is a short on XL. I do know that somebody was taking advantage of the dip to $7.90 today. It was off 4.58%. And then if it went to $7.90, that was another 23 cents. It was off 7.5% at some point today. Somebody started at a position when it was off. And I'm going to tell you because I'm going to look at the one day and I'll tell you exactly when it was because I saw it happen twice. All right. So the first time it was about 1:30 p.m. The market was changing direction and they took the stock from sub $8 all the way to $8.16. All right. Now, how do I know it was the same people? Because when they did the second movement, which was a stronger movement, and this is for XL for the day, it was about a little earlier than 3:30. It was about 3:20 or 3:25. You can see it. And what did they do? They took it from 8.02, the same freaking amount, to $8.16 or 17 cents, the same amount, meaning they were willing to buy up the shares from $8.02 to $8.16. It doesn't mean that they're going to buy every single share that people flood the market with. I don't know how many shares XL have, but I'll tell you, they have 139 million out there. Actually, some of these institutions, they can buy up over 1 million shares or 2 million shares. So wouldn't surprise me. Yes, I see XL bouncing back. It had 4 straight outflow days. Again, green energy, if you look at Canadian Solar, First Solar, they've been in trouble for a couple of days. Canadian Solar went from like 41 back to 38. I told someone it was not going to break $42. It just wasn't. All right. All these stocks. QS is in the same group. So the fact that QS had a positive day makes me either think QS is standing alone or XL will have a good day too. So 30%. Yeah, I would probably average down, Diego. I'm not going to lie to you. I think you're a lifetime member, so I'm going to tell you the truth. Yeah, dude, 30%. I'm too smart for my own good. I'd probably assume that they're going to be going down like 5 or 8% more. I might ask for like, if they're $1.70 now, I might offer like $1.60. I might do 2 orders, one for $1.60, one for $1.65. That way I kind of get in between if I get them both. And that's how I average down. So if I have 2 contracts, I'm going to buy 2 more for 165 and 2 more for 160. If I get them, now I have 6 contracts. If I only get one of those, then I have 4 contracts. The point is, that's how I average down. It's always math. You always have a theory and you always have an end game. Now, say Diego gets these options, whether he buys 2 more or 4 more, whether he has 4 or he has 6, okay? Here's what I'm going to ask you to do, Diego. When you average down, all right, maybe they're down 30%, whatever the average is, you take your new price as soon as you buy your new options. So you have 6 options. Say their average price is $1.56. You say to yourself, it was a beat up position. So at $1.56, I want 30%. I want 33%. So you want 50 cents and then say, okay, I'll take 49 cents. So you sell it for 49 cents more. So whatever it is, you're making close to 50%, just under 49, 48%. The point is, when your option play is beat up, you can't make 100% every time. So when you average down 4 or 6 more options, boom, know your exit strategy. Know exactly what you're going to do. All right, it's going to pour on me soon. Let's get to the next question. Okay. What's the way I estimate the bottom? Okay, sure. I'll try and simplify it for you. I'm looking at the 1-month chart, and whatever stock it is, pick a stock. You'll see the chart, right? So the bottom, when people say it retests the bottom or double bottom or triple bottom, that because it finds a baseline that the stock seems to bounce off. When you hear people talk about the tech and it bounced off this, or the market's bouncing off this, okay, it's down a certain amount and it seems to bounce off the bottom. That's what they're talking about. The same is true for stock. You're looking for support. Now, support means at a certain price, institutions, banks, hedge funds, people with money are jumping in and buying the stock. So for me, I'll use XL as an example. I see $8.02 to $8.16 as support. So if you tell me right now it closed at $8.11 and it's down to $8.04 after hours, I'm going to tell you, no surprise. But somebody will be buying tomorrow. They're going to wait for the market to open. If the stock goes sub 8 again, they'll be buying sub 8. They're not going to overpay. The point is, they showed us their hand. We're playing cards. They showed us their cards already. They're going to buy from 802 to 816. If the stock goes north of 816, they're going to buy. All right. If they get a good value and it goes down, then that's just giving away cheap shares for whatever stock it is. Okay. I talk about the ones that I know and I have specific examples for, but that's true with any stock. All right, next question, please. Thanks for bringing that up, Chris. I like it. So I'm going to tell you what I see in that. Again, anybody that wants to follow along, please go to the 1-month chart. Why the 1-month chart? Because it shows you inflow versus outflow. I use Webull. A lot of you use Webull. So I will open up the 1-month chart. And again, it's under $9. I spoke about this before. The options I bought were $8 calls for $1.01, meaning my break even is $9.01. Anything over 901, say it's 902, that means they're worth at least $1.02. I have till Friday. Right now it's 5 cents off. So it's probably maybe 3 cents off what I paid. It's probably like 98 cents right now. So what am I looking at? Starting on June 2nd, okay? Look at the 1-month chart. June 2nd, inflow, green day. Then 2 days of red, but smaller. So the volume was smaller. Then 3 state green days, inflow days, where the stock went up. Then 1 red small day where it consolidates. Then you had a small green day where it didn't move much. Then all of a sudden, huge demand pushed it up to $9.42. I think it was north of $9.50. So right there, when he says use charts, how does it work for this? Yes, I'm telling you right now, this stock will be north of $9.50 at some point this week. Wednesday, Thursday, Friday, it will be north of $9.50. So when I gave an alert today on SNRE and I paid $1.01, at some point, I believe I will get at least $1.50 for my options. $8 calls. I'm telling you, the stock will be north of $9.50. So right there, it's $1.50 plus the time. If it happens tomorrow, I get $1.60. If it happens Thursday, I get $1.55. If it happens on Friday, I get $1.50. The point is, I paid $1, I get $1.50 or more. That is 50%. That is planning ahead. Ask me, do I care if it happens on Wednesday? No. Do I care if it happens on Thursday? A little more, because I don't want to shit my pants on Friday. If it goes to Friday, I still know what I'm looking for. We did the same thing with Fisker last week. On Friday, I said, hold. We held. Fisker went where I said. It was up 8% that day. We sold it like 5.5%, 6% when it was up. Options, good return. UVXY, we sold when there's so many stores. All right, next one. All right, Matt, please suggest Jumia calls that expire June 25th. Strike 31.5. Your average cost is 106. You're down 60%. You can average down 2 more times. Okay, so I spoke about these before. I'm going to actually give you the example because let's bring it up. JMIA. Let's see how bad it looks. My point is I'd rather go out to at least July. In fact, I think you need to go out to July. Okay, it was an off day today. Why was it such an off day today? There was heavy selling that continued from the 3 days prior. There were 2 inflow days that took the stock up for the past few days, but it was very light volume. So all in all, it's really mixed. It does have support right where it is at 27.40. It's at 27.80. So yeah, I like Jumia from here. I just think it just basically fell off the cliff for 5 straight days. It just looks terrible. But what do? We zoom out. Remember, zoom out. Stop zooming in. Stop looking at today. Stop looking at yesterday. Stop comparing them, okay? 31.5. Oh, you're far off. I would not average out with those, okay? 31.5. So you need at least a $3. You're looking for like a 12 or 15% move. Now, say you have $31.5 calls like this gentleman right now, and the stock moves 10%. Guess what? Your options aren't moving 60%. No. The stock, even if it moves 10%, would still be under $31. Means your options still look like shit. I mean, the only good thing is they expire next week. So no, I don't like those options. What I would do is I would buy Jumia is at what now? $27.80. So I would look at $28 calls or $29 calls. Probably 28 because that's with my rules. 28 or $27.50. I say in or at the money and go to July. So how many did you buy here? Your average cost was 106. Let's say you bought 5 and you're in for $530. Okay, let's say you bought 6 and you're in for $636. I want you to take 50% more of that. I want to take $1,000. All right. If you're in for $1,000, I want you to take $2,000. If you're in for $3,000, I want you to take $6,000. And I want you to buy the Jumia calls that expire July 16th or 18th or whatever that July date is. All right. It means Jumia is going to turn around. And when it hits 33, it might be July 10th when it hits 33. And your $29 calls are going to be worth $4 and change. You're going to be up like 60, 70%. These, you can't average down. It's like throwing good money after bad. You're $4 out of the money. You're 12% out of the money. You're down 60%. Wait for a spike tomorrow. If you're down 60%, that means they're like 43 cents. I would probably put a sell order in at 45 cents tomorrow. Hope that someone buys them. Maybe 50 cents. Now, the other option is you ride them, okay? So you ride these forward at least for a day. You don't average down with these. You have 6 contracts. Whatever it is, you paid $800. Go $1,600 out, okay? Double whatever money you've invested in Jumia here. Go double that for July, okay? That's a safer play. That way, if Jumia bounces later tomorrow, okay? No Fed, no rate, hike. Jumia bounces, tech is good. You don't get scared. You don't sell these out, and you have a way. You already bought the other ones. That's why you average down using July. Next question, please. Decent question. Go out. Watch episode 37. Anybody that's just watching this now, watch episode 37. Yeah, please, everybody, hit the like button. Pay this forward. Share it. I'll share this with Twitter. Oh, yes, I got to cook dinner for my girls. 2 soups, 2 different pastas, a potato, sweet potato. Can we post a question on how, Matt? MAME. Is that not it? MAME. A MAME stock. A meme stock? A MAME stock. MAME. I'm going to go with MAME. Sounds like Maine, but Maine. Okay? That's what I'm going. Final answer. It might be a meme stock. I don't know. Meme? I don't know. Sounds interesting. All right. Thanks, everybody, for watching.